Thank you to the Alumni Relations for the opportunity to present and speak directly to fellow members of the prestigious RIT alumni and guests today. Having been in the business over 36 years, I understand a great deal about not only real estate, but the local market. After all, Magellan is a local, independently owned company that will turn 24 years old this October. Recently, I attended the National Association of Realtors Mid-Year Legislative Conference in Washington, D.C. As a result, I was privy to several sessions, including one on the National Economic Forecast with Dr. Lawrence Yun, Chief Economist for NAR, and one commemorating the 50th anniversary of the Fair Housing Act with Dr. Ben Carson, Secretary of Housing and Urban Development. Today, I am sharing some of what was introduced at the conference, as well as my own experience in the real estate and new construction industries. Please note again and hold any questions until the end of the presentation, which at that point, I'll be happy to address them. Okay, let's get started. The housing market has changed dramatically the past 3 to 4 years, and buyers and sellers are facing unique challenges as well as opportunities. With the lowest housing inventory in 30 years, this webinar is designed to educate consumers on how to better position themselves, whether listing their home for sale or negotiating the purchase of a new home. It is also intended to share a glimpse of the housing market over the next 2 years. Here's some economic facts that came from the conference. The country has seen job additions for 90 straight months after coming out of the last recession. The economy is sound, with unemployment at 3.9% approximately and 2.5 GDP. The stock market is still rising, and so is net worth. Though 2 million new jobs are being generated each year and wages are picking up, we have 2.5 million new people in the country annually, so housing has not yet met demand. If you're thinking of making a move, hot spots for employment are Provo, Orlando, Boise, Austin, Riverside, Nashville, Charlotte, Phoenix, Jacksonville, and Vegas. Total job openings are sky high at over 6,000. Relocation friction, or a lack of willingness to move, a lack of skill sets for construction, and a backlog of orders which increases productivity and ramps up hiring are a few of the reasons for the large number of job openings available. To give you an idea on what prices look like nationwide, the median list price right now is $290,000, and the median sale price is $263,300. Looking at the current housing market, in 2017, we experienced the lowest the lowest inventory of existing homes for sale nationally in 20 years. In 2018, we have the lowest inventory of housing or existing homes for sale in 30 years. Over the next 2 years, housing sales are expected to increase by only 4%. If you look at the graph to the left, you'll see prices are at record highs, as I mentioned on a previous slide. Inventory, again, is at record lows, and that's really what's driving up the prices. A year ago, May, I attended the National Association of Realtors Conference in D.C., at which point then there was speculation that by 2020, for example, California would become a rental state with more households renting than owning. And you're going to see in a minute here that some of the reasons for the low housing inventory is, number one, homeownership has reached a 50-year low. What I heard last year, for example, was that California might become a rental state. And that's, right now, they're thinking maybe by 2020. The number of first-time home buyers is lower because these buyers are discouraged by the lack of inventory and affordability. And another reason for low housing inventory is that, as I mentioned, those in the 65 age bracket are more interested in renting than owning. Those in the 65 and older bracket are seeking more maintenance-free options and community amenities as opposed to more square footage. Unfortunately, as we will continue to see, the lack of new construction has not provided sufficient opportunities for the mature audience to own, but rather developers of rental properties have stepped up to take advantage of the lack of residential market rate housing. Go back here. Some of the advantages to sellers in today's market, though it's not a seller's market across the board, and that's a question I get asked often, is it a seller's market? Well, it all depends. It is a seller's market for certain pockets of product, locations, and price ranges where demand outpaces supply. Many sellers are receiving multiple purchase offers for their homes, often thousands of dollars above asking price in today's market. We see that all the time in our office. And home prices are expected to increase 8% over the next 2 years. Some disadvantages to sellers. With the high demand for certain products and price points, homes are selling in a very short period of time. This can add pressure to the seller if they have yet to finalize their plans to purchase another home. With the interest rates on the rise and fewer homes on the market to preview, many buyers are delaying the decision to purchase. Here's some tips for sellers. There's no best time of year to put a home on the market. That's another question that we get asked often by the public. When is the best time to put the home on the market? Should I wait after the holidays or the springtime? And basically what I tell sellers is put the home on the market when you're ready to move. Relocating as well as serious local buyers are always looking for the right home. Another tip, have home repairs completed prior to putting the home on the market to maximize best presentation to potential buyers. Another tip, have your real estate agent conduct a market absorption analysis to better understand the demand for comparable homes over the past 12, 6, and 3 months. The analysis will explain whether the market is heating up or slowing down for your type home, and also reveal the number of months of inventory available of the same product yet to be absorbed by the market. And lastly, don't be pressured to accommodate the buyer if you need time to finalize next steps for you and your family. You can always accept an offer subject to locating and negotiating a new home within a stated period of time. Okay, apple pie and home ownership. 8 in 10 people say that home ownership is part of their American dream, and 9 in 10 want to own a home in the future. Dr. Ben Carson, this past May, delivered several new proposals in the works to increase home ownership and affordability for millennials and first-time home buyers. What you're going to see here are some advantages to buyers because of some of the proposals that the Department of Housing and Urban Development is working to get through. The first one is the government is seeking to propose alternative methods to increase housing affordability and enhance the mortgage qualification process for millennials and first-time home buyers. The average net worth of a renter is $5,000, but the average net worth of a homeowner is $230,000. Renters who pay their rent on time have only a 1% mortgage default rate, which is a huge indication of potential success in home ownership. Mortgage programs that consider rental information on credit scoring are now being reviewed. Another proposal that I thought was pretty cool is described as rental with escrow program. The idea suggests that a portion of a tenant's monthly rent go into escrow, with the landlord to eventually grow into an amount that could serve as a down payment on a home. It encourages renters to think and act like a homeowner. For example, if their apartment or unit needs a repair and they properly fix it rather than call the property manager, the escrow remains intact. If maintenance is required, the cost of the repair is deducted from the escrow account. Now, Dr. Carson shared a story that lines up with this particular program and it being proposed. He shared that one night he woke up, actually his wife woke him up because there was an issue with the plumbing. The next day he called a plumber, and the plumber said to him, "Sir, I can fix this problem. In a couple of hours it'll cost around $280. At which point Dr. Carson replied, "I'll fix it myself." Another program, or proposal I should say, is to modify the HUD condo rule, acknowledging that a condo is sometimes the first entrance to home ownership for a lot of buyers. This motion would allow purchasers of individual condos the opportunity to access FHA funding, even though the entire condominium community is not FHA approved. And lastly, another effort to increase home ownership for millennials and first-time homebuyers is proposed financing that folds student loans into a mortgage program. To the left, you see a graph or chart here showing the difficulty people are having saving for a down payment. What you see in blue are first-time home buyers, and what you see in gold are repeat buyers. To the right, we see what's going on with student debt, which is a massive barrier to purchasing a home. Mortgage rates are going to continue to rise. They've been talking about mortgage rates rising since before Dodd-Frank, which changed a lot of the regulation with regards to mortgage financing. Interest rates today are 4.55% for a 30-year fixed. 15-year fixed rate, 4.04%, and one-year adjustables are in at about 3.87%. I want to say 4 years ago they were talking about rates going to 5%. So they are not quite there yet, but you are going to see the rates continue to rise. Some disadvantages to buyers. Building is still 30% below demand and not providing entry-level housing. The rise in home prices is causing an expression of pessimism. Also, the lack of inventory is causing buyers to wait. Statistics show they want to see 10 homes, not just one. Interest rates are on the rise and will cause buyers to pay more for a home if they delay their purchasing decision. Now, here's some tips for buyers. Be pre-approved for a mortgage and prepared to purchase before you start shopping for a home. Now, I mentioned pre-approved, not pre-qualified, and a lot of buyers get the two mixed up. Pre-qualification is a simplification, and it's really not the same as being pre-approved for a mortgage, which is what most sellers are looking for in a prospective buyer, and will consider their offer a more solid offer if it comes in with accompanied by a pre-approval from a local lender. Don't assume a better home is coming on the market and delay the decision to purchase. The first home viewed may be the best one. Rising interest rates and home prices will add up quickly when it comes to your mortgage payment for the same home you could have bought last year for less dollars. Have your real estate agent prepare a study of similar properties prior to viewing homes where there is a high level of interest in order to gauge the maximum opinion of value at time of purchase. Where there is the possibility of multiple offers, put forth your highest and best offer up front. When there's multiple offers, there's no time to negotiate. You really do need to give your best offer first in many cases. Negotiate ways to add value to your purchase offer alongside price, such as all cash, if that's a possibility, no seller concessions, no inspection, a higher deposit, earlier closing date, etc. And make sure your agent understands how to protect your interests in the purchase contract if another purchase offer is presented to the seller between accepting your offer and attorney approvals. Used to be that attorneys could not kill a transaction or purchase offer without cause. Now they can kill a purchase contract without any mention, any reason. So just make sure that you're protected. In summary, between 2011 and 2017, income increased 15%, but home prices during the same period of time have gone up 48%. The only way to curb this inequality is to choke off demand, but this is not good for the economy or housing. Instead, we must increase new construction. To increase new construction and lower the cost of building, we need community banks to provide key relief by lending to developers. We need to remove the tariffs on lumber, etc., and relax zoning laws. Now, I want to mention something before I summarize the last 2 points here. Back either this past May or a year ago May, Dr. Lawrence Yoon, Chief Economist for the National Association of Realtors, when he mentioned that the housing crisis was directly related to a lack of new construction, stated that we needed to get our builders back to work and that there was no plan B to correcting the existing housing crisis. So bottom line, we do need to get our builders building again and increasing affordable new housing options. New construction, for most people who don't realize this, not the automobile industry, has always been the leading indicator in the state of the economy. For every existing home sold, 600 people go to work, but for every new home built, 6,000 people go to work. New construction creates job opportunities and an increase in employment, provides more opportunities for individuals and families to purchase a home. The last 2 points I want to summarize here is the #1 area of knowledge consumers want from their real estate professional is market experience and insider knowledge of neighborhoods, schools, and market trends. Not all real estate agents are created equal. Interview your agents wisely to protect your equity and garner the highest return on your real estate investments. I want to note, too, that all graphs were provided by the National Association of Realtors, and I'm ready to take questions.
All right. Thank you so much, Kim. I believe people now would be the chance to add in, if you're saving those questions till the end, as we asked, now is your chance to ask them for Kim. We have a question for you. What's the most important thing to have in mind if I'm thinking about buying a house for the first time?
Okay. Well, the #1 step is to get pre-approved. Not pre-qualified, but pre-approved. Pre-qualifying, like I said, is a simplified process. It can be done very, very quickly, but pre-approval is what sellers are going to be looking for when it's time for a purchase offer to be written and submitted, and you're looking to win that home. So first step is to get pre-approved.
Great. A question from someone who lives in the Charlotte area. She's about to sell her first home. Do you have any advice for finding the perfect agent and negotiating their rate down since it's such a big seller's market?
Oh, great question. And once in a while in this type of market, and I've been in the business, as Amber mentioned earlier, for 36.5 years. So I have heard that question, especially during a time as when the market's hot. I would say that in interviewing agents, have the right questions prepared to ask the agent. For example, how long they've been in business, what type of real estate they sell, what they're going to do to market your home, Are they going to be the one presenting your home in person, or are they going to have do they have a team that's going to be showing the home? So you just want to know up front if the person that you will think you're hiring to represent you from whatever agency they work for is actually the person that's going to be communicating with you and showing your home. When it comes to the commission, I just want to point, and National Association of Realtors does have strong data to support that if you have the right realtor working for you who's doing the right marketing, you are going to net more dollars by using a real estate agent than you're going to save by not using a brokerage firm.
And you touched on this question a little bit just now, but in addition to the questions you mentioned for vetting the realtor, are there any others you think that would be best to ask? Maybe some specific for if you're buying or some specific for if you're selling?
Again, how long they've been in business, how many transactions do they do, or what kind of sales volume, what's their specialization? I think specialization is really important. And I don't mean to put any agents down because I'm in the business and I promote agents every day. But if some agents, an agent may have been very good 20 years ago, they might just be winding down a little bit now. So you want to know what their history is and what they're doing today and how well they're doing it. But specialization is also important. An agent that specializes in a certain area of homes or a certain price point might be good questions to ask depending on where the buyer is buying or the seller is trying to put a home on the market.
Great. Questions are coming in fast and furiously, so luckily we have some time to answer all these. Are there negative consequences in foregoing an inspection?
That's another great question. Well, depends on the condition of the home. Yes. Here's my disclaimer. You never know what's going on behind the walls, but neither does an inspector. Years ago, when I got in the business, no one did inspections. No one did inspections. And it was probably about 20-something years ago that inspections became more popular. So I would say if you have experience with construction or someone in the family or a friend has experience with the construction, they might be a good advocate to take a look at the home and give a good opinion of whether they think the home has a need for an inspection or whether the mechanicals seem to be good, the roof seems to be good. Inspections are really not needed on every home, but unfortunately, public opinion is that it's needed. It's not required, but the public, I think, it's just added insurance, perhaps.
And do you find that if people do forego an inspection when they're negotiating, that's a good selling point?
It is a very good selling point, and that's why I mentioned it earlier as a tip for buyers. If they do put in a purchase offer in a competitive environment and there's anything that they can add to their price that will give them a competitive edge, no inspection might be one of them.
Great. This one is specific to the Rochester area. Do you have any numbers for Rochester in terms of average home prices that are selling or number of homes that sold $5,000 to $10,000 more than their list price? I guess just average home price and how much...
I can tell you the average home price here in Rochester is approximately, don't quote me, it's around $135,000.
Okay, and then when you're out in the market, are you finding that there are a large number of homes or a smaller number of homes that are going for $5,000 to $10,000 above list price?
Depends on the price that the home was listed for. If the home was listed below market value, that is where I think we're seeing the biggest overage, we'll say, of sale price to list price. Not necessarily because the market drove it up. It's because the home may have been listed too low to begin with. And then there are times when it's just extremely desirable property And as long as it's going to appraise, and that's what sellers have to remember, and agents have to remember too, that no matter how high a price the seller gets, it still has to appraise by the lender that's going to be brought in by the buyer.
Great. If I'm looking to buy a house in the next year or two, how early should I start looking, and how early should I be pre-approved?
Well, lots of things can happen between now and the time that you buy a house. So your pre-approval today may mean absolutely nothing in a year and a half to 2 years. Income might change, employment might change. If you should go out and buy furniture or a new car, it's going to affect your debt ratios, and therefore it's going to affect your ability to qualify at the same rate or mortgage amount that you might today. So that's one thing. The other thing is you don't want to look too soon in a hot market, and it depends on where you are, and it depends on the type of product, and I say product and price point and location of the home that you're interested in, because as I mentioned earlier in the webinar, it's not a seller's market across the board, but if it is a seller's market for the type of product that you're looking for, then the home, it will be gone. You'll go look, you'll go shopping, and the home that you fall in love with will be gone tomorrow.
Great, good advice. What are your suggestions on holding on to a current property to be an investment property, getting a loan against your equity, and buying a new place?
Well, first of all, that's a great question for a lender to find out what your ability is to own two pieces of property. If you're going to hang on to the existing property and lease it, then you want to make sure you're in a position to qualify or carry, I should say, both properties. And then if you really need, from an investment standpoint, that's a whole other area of real estate, and you certainly want to make sure you're talking to the right person as far as investments, because it depends on what your net is, what's the gross potential, or the potential rental income, I should say, and then what are the expenses associated with the investment property. What's the net return? Is it going to garner a higher cap rate, will say, for you than if you were to put your money someplace else?
Great. Like I said, we have a lot coming in. So should I put my house on sale first, or find my new house first? We have lived in our current home for 40 years and want to sell it now and downsize.
Again, it would depend on what's going on in your market as far as the home that you live in, and the demand for that type of product and price point. If it is a hot market, you will for sure want to go out and find another home first and put that purchase offer in subject to selling your home, because chances are, as soon as your home goes on the market, you will have a buyer if it's priced properly.
Great. I am a first-time home buyer in Oregon, but expect a job-related relocation in the next year or so. Would you recommend buying now before relocation and putting it on rent/sale if I have to move? Thanks.
I'm not a big fan of rentals that you intend to occupy, because a lot can happen from the time your tenant takes possession of the property and you do. And unless you are protected by an attorney who will make sure you have a good rental agreement and a large deposit, so that if there's any damage to the property, that you can recoup what you need to correct those damages. So I'm not a big fan of that. Though, as you saw in my webinar earlier, prices are going to continue to rise, and the National Association of Realtors predicts that rates will continue to rise by 8% over the next 2 years. So obviously buying today you're saving dollars by doing that. So a good investment analysis and speaking to an attorney might be the best recommendation I have.
When you mentioned 48% increase and the lowering demand, shouldn't the housing market soon correct itself if demand is low due to high prices and rising interest?
everything should self-correct at some point, except that the problem that we really have is outside of our control, and that's the lack of new construction that was basically occurred during the last recession. I specialized in new construction for about 26 years prior to the recession. So it was a very sad day when the recession hit, and a lot of our builders locally and across the country literally dried up and blew away. And when that happened, so did a lot of our skilled craftsmen. So the lack of new construction is the single reason why we have a housing crisis to begin with. And as Dr. Yoon described it, there is no plan B. So normally, if we had new construction going on, we might see something changing. It should self-correct because the market is usually in 7-year cycles. 7 years good? 7 years sounds like feast or famine, sounds biblical, but it's 7 years of good, and you've got your peak, and then 7 years of, you know, your valleys, and the longer the peak, the longer it takes to resuscitate, or get back. But anyway, we're in a very, very unique situation, which is why we have the lowest housing inventory of existing property in 30 years.
I'm looking to list my house for sale in a market that does not appear to be as hot. Do you have any suggestions for encouraging a quick sale without sacrificing too much on price?
I'll tell you what's worked for me personally, and I can't speak to the seller here, but I have had great luck in two out of three situations where I sold my own property. I included all furnishings. And one was a Victorian home, and I had purchased a lot of antiques at estate sales and garage sales and auctions, and nobody really knows what you've paid for antiques. So I did really well in that respect. And then the last home that I sold, I did the same thing because I was moving from a home, a traditional home, into a loft downtown. And the furniture in my existing home was just not loft furniture. So I decided to package up everything and include it with the sale of the home. And I got a great price and and I had renovated that property. So I had kind of violated one of the rules that we as realtors tell consumers, don't over-improve your property for the neighborhood. And I've done that a couple of times, but I've always been successful in getting every nickel out. In this particular case, I included all of the furnishings. I included the dishes, the linens. I even left 2 dirty dish towels on the washing machine when I left. And I got I got almost full price cash by the first buyer that looked at the property. So that's just one suggestion. Just price the home properly for the market. Have it staged properly, have it decluttered, have it cleaned, have it staged, have a good agent who knows how to market and is creative with marketing and will do the things that are important to get you the best price for your home in the shortest period of time.
So truly turnkey home you are selling there.
I loved it. And the gentleman who bought it, he had just gone through divorce. All he had was a mattress.
Oh,
so
wow.
It works beautiful.
I'm surprised you didn't leave, like, ketchup and mustard in the fridge as well.
No, just about everything else.
The next question we have, I just lost it. Give me a moment, folks. Sorry. You shared an increase of 8% in the next couple years in housing prices. What types of near-term economic changes would drive prices in the opposite direction?
What will reverse this crisis is more new construction. And I'm actually headed to D.C. a week from today to meet with the CEO of the National Association of Realtors. The next day I'm meeting with the National Association of Home Builders to talk about first steps to corrective measures. That's the only thing. If we can get our builders building again and building some affordable housing, people will feel that they can put their houses on the market because they have options as to where to go, and that will begin to stabilize as we get more and more existing homes on the market. That will begin to bring prices back down.
with a new home, with a home in the Spencerport School District, is it seen that selling before school starts in the fall allows the home to sell quicker? When is the best time to sell a home in the shortest time period?
Truly, and I think I mentioned it in one of the slides, the best time to sell the home is when you are ready to sell, because there are always buyers, serious buyers, looking. I like when people put their homes on the market around the holiday time, because everyone thinks you have to wait till after the holidays, and of course, if you go in the reverse direction, then you have less competition. So there are less homes to preview, more serious buyers are still looking, and I think it tends to drive faster, better sale.
Where can I find sufficient information to know if we are ready to buy a home, if we have sufficient down payment, et cetera?
I'm sorry, what's the question again?
So basically, is there a resource that you know of that will let homeowners know when and if they're ready to buy?
Let the seller know, the buyers know?
Buyer.
Okay. But when the buyer's ready to buy and they're qualified to buy, that's probably the best time. Again, if they wait too long, everything's going to work against them right now, at least for the next 2 years, because we know prices are going to increase by 8%, according to National, and we know that rates are already increasing as they've been promised years ago. Like I said, probably 4 years ago, they were promising rates would jump, and they're going to continue to rise. They have, it's just the way it works. So if a buyer is pre-approved and they're ready to go, it's time to go.
Can you further explain the student loan and mortgage combination plan? I'm unable to remember the term that was used.
But there really wasn't a term, except that Dr. Ben Carson explained that there are several programs that are being proposed, and one of them, which I think is brilliant, is to combine student debt with a mortgage loan. Next to mortgage debt, student loans are the next highest debt that the public is faced with. So if they can combine the two at a decent rate, and I think 5, 6, people probably would be like shocked to hear me say that I think 8% is a decent interest rate, because the year that I got into the business, which was 1981, interest rates peaked at 19.75%.
Did you say 19?
19.75%. People were going in at 17 and then again at 15 and 14% to refinance. And back in those days, when you went into refinance, it cost you thousands and thousands of dollars to do that. So when I see 4%, 4.5%, 5%, not such a big deal.
Gotcha. As the next recession looms, do you think it will be best for a first-time home buyer that can buy a home, should they buy it now or wait until the recession comes?
Well, we don't know when that will all happen. That's kind of like waiting for the end of the world. You know, we don't really know when that's going to happen. I'm not seeing, I'm just not seeing that being forecasted. Of course, the last recession I was forecasting it in 2004, and it didn't become public until probably 2007, but that's because I had been so involved with new construction, and I watched those peaks and valleys for so many years with new construction, and being that new construction is kind of a leading indicator in the state of the economy when you start to see the signs of new construction. Well, that's not the case now, because we have no new construction, or what we do, we have new construction, but it's just not as much as we should have. We are, I think, one of the charts says we're 30% below demand as far as new construction.
What advice can you give for how to stage an unoccupied home inside and out for sale? How can we improve curb appeal? How can we present the best first impression on the inside?
Clean. That's really the easiest, cheapest, if you do it yourself, is to have the home really cleaned. And I don't just mean the floors and rooms. I mean cupboards cleaned out, closets cleaned out, so that buyers can feel comfortable walking through the home, exploring, because if they start to open up the cupboards and they start to open up the closets, and they start to take room measurements, they really are interested in the house. So from the inside, you want it decluttered and cleaned. You really want it sparkling. And from the outside, you want to trim your bushes. You want to make sure that the lawn is in good shape. If there's any paint touch-ups that you can do on the outside of the home to dress it up. Just the best advice is look at the home as though you were a potential buyer.
Mm-hmm. And we still have a few more questions, so if you're game, we'll keep going with these. As a seller, should I have a home appraisal done to present to the buyers to maximize my selling price?
You could, if your price is being challenged by the realtor, you might want to do an appraisal. There are several ways to get an opinion of value. Let me price or opinion of value is really the same thing, but there are several methods to doing that. And if an agent is versed on how to do that, as well as market absorption pricing or market absorption analysis, which I mentioned earlier, then you're going to get a really good opinion of value, and you won't have to pay for an appraisal because that's really a buyer's expenditure when they go in to the bank. But if you feel that will strengthen your position because you feel your home is worth more than maybe what the realtors are quoting you, I don't know the situation, then surely you can do that. And appraisal is only going to be good for so long. So depending on when you put your home on the market or when it sells, that appraisal might be able to transfer, but it may not.
Gotcha. Next question. I have read that being in a good school district is one of the most important things to look for, even if a buyer doesn't have kids, because a future buyer might. Is this true? I am looking to buy in a neighborhood with an average, not great school district. Is this setting myself up for failure when I one day decide to leave my starter home?
Wow. Well, here's my disclaimer on that. As a licensed real estate agent, we're not allowed to discuss certain things, and school districts is one of them. Mm-hmm. So to answer your question, it depends on who your market is, I guess, as to whether if your home is, if you know who your potential market is, then that might help you understand a little bit about the importance of that. But it's not. There's no right answer for that because there can be multiple markets for the same type of property.
Okay. All right. What are some tips you have to sell as quickly as possible? I think you just kind of touched on one, the clean factor, but are there any others?
Tips to sell as quickly as possible?
Yeah.
Well, don't price the home to sell overnight. When I hear sellers say excitedly that they sold their home overnight, I sometimes feel bad because even in a hot market, I don't think homes should be selling overnight. I don't think that they should be sitting on the market for weeks in a hot market, that's for sure. But I don't think that they should be selling overnight. I think that with the right analysis of pricing for similar homes, and let me qualify that because no two homes are alike. And they might be similar in square footage, they might be similar in age, they might be similar in style, meaning they're two-story or one-story or a cape. They might have the same number of bedrooms and baths and garage and similar lot size, but no two homes are alike because one home has a gable roof and one home has a hip roof. And if you know anything about new construction, you know that a hip roof is probably $4,000 to $6,000 more to construct than a gable roof. That means there's more value to that one home. So in selling a home quickly, if you have enough information about what similar homes are selling for, and you know the features and benefits and amenities that your home has that the comparable properties that have sold don't, and you have an agent who knows how to point out the value associated with your property that differentiates your home from the other comparable, or the comparable properties may have features and benefits and amenities and upgrades that your property doesn't. The best thing is to get an opinion of value that is sound, clean the house, make sure it has great curb appeal, and make sure it's being marketed properly, and it will go.
Great. Next question, considering a volatile job market, how long should a first-time buyer expect to stay in the area before buying a house?
I don't think it's the job. I think it would depend on the buyer and how sound their experience is, and how valuable they are to the industry that they're in. And then it depends, of course, on the market, what's going on in the market, or in their industry, or in their company. So I don't think it's a one-size-fits-all.
So do you have any recommendations then? So let's say somebody moves to a new city for a job or something. You know, should they wait before buying a house, a year, 2 years, or what's your recommendation on that?
Given prices are going up and interest rates are going up and expected to continue, I would say buy it if you're qualified to buy. Renting really doesn't put dollars into a buyer's pocket or a homeowner's pocket. It's home ownership, and home ownership increases stability, it enhances stability.
Great. As a seller, why do I pay the buyer's real estate agent's commission?
Say again?
As a seller, why do I pay the buyer's real estate agent's commission?
Well, typically, I don't know about where you are, what kind of contract. The seller usually has a contract with the listing agency, and the listing agency, at least in New York, in my area, it's the listing agent's responsibility to compensate the cooperating agent or the buyer's agent. So why is the seller, I guess it's a negotiable item. Everything is negotiable, except for maybe the kids or the pets. But, you know, it's one of those things. It's whatever the seller, whatever contract they sign and what they have agreed to that determines who's being compensated and by how much.
When buying a second for rental, which one is better, condo or house, for profitability or maintenance?
When buying a condo or a home? For rental?
Per se, a rental, yeah, for their second property.
Again, it would depend on the market and the demand for condo product as opposed to single-family product for rent. And the agent can do some research to identify how many condos are selling in a certain price range in a certain location over a certain period of time, and can do the same with single family. And then it also depends on what the investor / seller, whoever, is, what kind of return are they looking for on their investment, and that's a personal thing. That's really a personal thing.
Okay. How should I go about finding the best mortgage rate without negatively affecting my credit score?
You can Google just about anything. I think that's my kids I'm always telling my kids Google it. So I would say Google it, or you can speak to a variety of mortgage brokers or lenders who will tell you what their rates are without you having to qualify to be pre-approved. It's when you qualify to be pre-approved and they start checking credit that it starts to impact your credit score.
This is from a first-time home buyer. Is it better to buy small now, pay the mortgage as soon as possible, and trade up, or is it better to save as much or is it better to save as much of a down payment as possible to buy bigger but later?
Well, again, rates are going up and prices are going up, and so I'm not sure that you're going to win that one by delaying the process. You know, the one thing that you don't hear often is that you can go for a 30-year mortgage program to keep the monthly payments down, but you can make extra payments in order to accelerate the payoff. So I think talking to a seasoned lender or mortgage broker and asking these questions, which are great questions, will help you with that decision.
Great. So we have time for one more question, and I have one more question right here. When you enter a home, what do you look for as a means of assessing quality?
That's a great question. This might sound silly, but besides nail pops, which again, I don't, depends on the age of the home. One of the first things that I do as far as quality is I walk up to a door frame and I run my hand on the trim, the case molding that's going around the door or the windows. And if it's a good painter, then it's smooth. It's just a nice finish. And that's a really silly response, I guess, because certainly a poor painter doesn't dictate the quality of the entire structure, but there's certain, I guess just the overall condition and the age. There are some homes that are older, but they look great. And then there are some homes that are not so old that look very aged. And so I guess that would be my response.
Great. Well, that is all the time we have for our Q&As. I know you guys have been a great webinar audience and have tons of questions. So if you have any additional ones that you want to ask or we didn't get to today, they can be emailed to us at ritalum@rit.edu or tweeted to the @RIT-Alumni Twitter account with the hashtag #MeRITWebinars, and we will direct your questions to Kim. Note that all participants will receive an email from us in the next few days with a link to today's webinar recording. I want to thank Kim again for being our distinguished speaker and for sticking around and answering so many questions. And again, I want to thank all of our listeners today for joining us and asking such great questions. We hope you will join us for our next webinar on August 9th. We will welcome Barry Schraber and Chris Cooley to explore the emergence of co-working, a new way of organizing work that is taking off across the globe. So check your email inbox for your invitation for this upcoming webinar. Thank you again to all of us for joining us. We hope to see you next time. And you may exit this webinar now by simply closing your WebEx window. And please let us know what you thought of the webinar by taking a brief survey, which will pop up when you exit. Thanks again and have a great day.